Hello everyone, welcome to Tesla Daily News. Today is August 5th, Wednesday, and the following is the latest Tesla news. According to El Nuevo Siglo in Colombia, Tesla has just delivered a standout performance in one of Latin America's most dynamic emerging EV markets. In March, Colombian authorities registered just over 5,000 all-electric vehicles across the country, marking a surge of more than 2.5 times compared with the same month a year earlier. In that rapidly expanding market, Tesla dominated registrations with roughly 2,450 vehicles, capturing close to half of all battery electric sales during the month. El Nuevo Siglo reports that this market share, close to 48%, puts Tesla far ahead of its global rivals in Colombia. BYD, the Chinese EV powerhouse and Tesla's closest global competitor, came in second with a little over 900 units and close to 18% share. Chery, MG, and Chevrolet rounded out the top 5 brands, but each of those remained in the single-digit percentage range individually. Combined, Tesla and these 4 followers accounted for around 80% of all electric registrations in March, highlighting a concentrated but highly competitive field where Tesla is clearly in the leadership position. From an investor's perspective, that Colombian data offers several useful signals. First, it shows that demand for Tesla's vehicles remains strong, even in newer markets where the brand has only recently established a direct presence. El Nuevo Siglo notes that part of the March spike is tied to the delivery of backlogged orders accumulated since December, coinciding with Tesla's official market entry. That suggests the brand built up significant pent-up demand before vehicles were physically available. This is important for shareholders because it indicates Tesla can create a robust order book even before traditional sales infrastructure is fully in place. Second, the product mix behind those registrations is revealing. According to El Nuevo Siglo, the Model Y was the single best-selling electric vehicle in Colombia during March, with about 1,790 units, representing more than a third of the country's entire EV market that month. The Model 3 followed with over 660 registrations and just above 13% market share. Together, these two mass-market models alone effectively controlled about half of Colombia's EV demand for the month. For investors, this reinforces the thesis that Tesla's crossover and sedan lineup continues to be extremely competitive in terms of perceived value, brand appeal, and total cost of ownership, even in countries where average purchasing power is lower than in North America or Western Europe. Third, the year-to-date trend in Colombia indicates that Tesla's March surge is not just a one-off spike. El Nuevo Siglo mentions that between January and March, just over 9,300 all-electric vehicles were registered in Colombia, a jump of more than 70% compared with the same period of the prior year. Over that period, Tesla LED with roughly 2,760 units and close to 30% share of the all-electric market. BYD was almost tied, with a little more than 2,670 units and just under 29% share. For Tesla enthusiasts and investors, this near head-to-head race with BYD in a growing Latin American market matters. It illustrates that while competition from Chinese brands is real and intense, Tesla can still secure leadership or co-leadership positions when it executes effectively on pricing, product availability, and brand positioning. Looking ahead, Colombia's EV adoption curve may provide a hint at how other Latin American markets could evolve. If Tesla continues to pair direct entry into countries with strong local partners for charging, financing, and service, it could replicate this pattern of rapid share gains in other economies across the region. For shareholders, strong performance in emerging markets helps diversify Tesla's revenue base beyond the more mature North American and European markets, potentially smoothing out cyclical fluctuations and regulatory changes elsewhere. Shifting from vehicles to energy, Primicious Digital in the Dominican Republic reports that Tesla is also expanding the reach of its solar and storage ecosystem in the Caribbean. According to Primicious Digital, RAAS Solar, a Dominican company specialized in solar power solutions and a certified Tesla energy partner, has officially launched Tesla Solar Roof in the Dominican Republic. This launch was announced during an event at RAAS Solar's sustainable corporate facility in Santo Domingo. Primicious Digital explains that Tesla Solar Roof integrates glass tiles with built-in photovoltaic cells, creating a roofing system that generates electricity while preserving the traditional look of a home. Unlike conventional solar panels mounted on top of existing roofs, the solar roof replaces roofing materials entirely, combining structure, waterproofing, and power generation in a single product. For Tesla's broader strategy, this reinforces the company's identity not only as an automaker but as a vertically integrated clean energy provider. For Tesla investors, the Dominican Republic launch is notable in several ways. RAAS Solar has been working with Tesla Energy since around 2020, when it became the first certified partner to install the Tesla Powerwall home storage system in the country. The introduction of Solar Roof is framed by RAAS Solar as the next strategic step in a multi-year collaboration, rather than an isolated product drop. That continuity matters, because it suggests Tesla Energy is building durable channel relationships in smaller but fast-growing markets, not just opportunistic one-time projects. Primitious Digital quotes RAAS Solar's leadership saying that Solar Roof in the Dominican Republic is intended to offer households and businesses a package that combines solar generation, backup resilience during grid outages, and an architectural aesthetic that fits local housing styles. This positioning is particularly relevant in the Caribbean, where grid reliability can be an issue due to hurricanes and aging infrastructure. For investors, that highlights a key comparative advantage. Tesla's hardware and software stack, including Solar Roof and Powerwall, can be tailored to markets where energy independence and resilience are highly valued, potentially supporting premium pricing and strong margins. The article also emphasizes that each Solar Roof project in the Dominican Republic will undergo an individualized technical assessment. RAAS Solar evaluates factors such as shading, roof orientation, multiple roof levels, and local Caribbean climate conditions before finalizing a design with the customer. Installation, warranty, and technical support are handled directly by RAAS Solar inside the country. This approach reduces the operational burden on Tesla while allowing the local specialists to adapt solutions to the environment and regulatory framework. For shareholders, the Dominican story underlines the scalability of Tesla's energy strategy through local partners. Instead of building its own installation workforce in every market, Tesla leverages certified integrators. That model can accelerate market penetration, particularly where incentives exist. Primitious Digital notes that Dominican customers can benefit from tax incentives defined under Law 5707, which promotes renewable energy development, and can also participate in net metering programs. That means excess solar production can be sold back or credited against future consumption, improving project economics and strengthening the business case for Solar Roof and Powerwall. From an enthusiast's angle, the Dominican Republic launch underscores that Tesla is not ignoring smaller markets. While many headlines focus on large economies, real-world impact often grows through a patchwork of national programs, regional incentives, and local partnerships. A Caribbean island adopting Tesla's Solar Roof and Powerwall to address grid instability and high electricity costs is a concrete example of the company's mission to accelerate the world's transition to sustainable energy. Turning now to a development with potential safety and regulatory implications, the Hungarian outlet HVG reports that the United States National Highway Traffic Safety Administration, or NHTSA, has opened a formal investigation into a suspected suspension defect affecting a large number of Tesla vehicles. According to HVG, the probe covers roughly 1.2 million Teslas, primarily certain Model 3 vehicles built between 2018 and 2020, and Model Y vehicles built between 2021 and 2023. HVG mentions that regulators have received about 156 complaints indicating that the front suspension's lower control arm, sometimes referred to as a wishbone, can detach or fail. Such a failure could in extreme cases cause loss of steering control, which is why the issue is being taken seriously. The article notes that in many of the reported cases, the failure appeared to occur without clear prior warning, although some owners did report unusual noises coming from the front of the vehicle before the problem fully manifested. At the time of HVG's reporting, NHTSA stated that it was not aware of crashes, injuries, or fatalities directly tied to this suspected suspension defect. Nonetheless, the agency has launched what is called an engineering analysis, a deeper phase of investigation that can result in a formal safety recall if officials determine that a defect exists and poses an unreasonable risk to safety. The article recalls that Tesla previously issued 2 separate recalls for Model 3 vehicles related to similar suspension concerns, but authorities believe the currently investigated cases are distinct from those earlier manufacturing issues. From an investor perspective, this investigation presents both risk and an opportunity to assess Tesla's quality control trajectory. On the risk side, if NHTSA ultimately concludes that a defect exists, Tesla could be required to recall up to about 1.2 million vehicles for inspection and possible component replacement. That could carry material costs, including replacement parts, labor, and potential service network strain, as well as intangible costs such as reputational harm and renewed media focus on Tesla's safety controversies. However, it is important for investors and enthusiasts to note the difference between an investigation and a confirmed defect. At this stage, regulators are collecting data, analyzing failure modes, and comparing incident rates against expectations for wear and tear over time. Many automotive investigations do not end in large-scale recalls. The fact that NHTSA has not reported accidents or injuries tied directly to the suspected problem, according to HEG, may weigh into the final assessment. For now, the headline risk is high, but the actual financial impact remains uncertain. For Tesla owners, particularly those driving Model 3 or Model Y vehicles in the affected year ranges, the practical takeaway is to stay attentive to any unusual clunking, popping, or metallic sounds from the front suspension, especially at low speeds, over bumps, or during steering maneuvers. While the investigation continues, promptly scheduling a service appointment if such symptoms appear is prudent. If regulators later mandate a recall, Tesla would typically communicate directly with owners and perform necessary repairs at no cost. From a strategic angle, this development ties into a broader debate about Tesla's plant-level quality control and its balance between rapid innovation and manufacturing robustness. For shareholders, recurring safety investigations and recalls can be interpreted as signs that some design margins or durability assumptions need adjustment. On the other hand, every automaker with high volumes and complex mechanical systems faces recalls and investigations over time. The key questions for the long term are how quickly Tesla identifies root causes, how transparently it communicates with regulators and customers, and how effectively it redesigns components or processes to prevent recurrences. Finally, a brief mention of a more speculative but intriguing development from France. A French media link suggests that Tesla has introduced its first bicycle and is explaining the rationale behind this product. The page content itself is not directly accessible due to access restrictions, which means details are limited. However, if confirmed, a Tesla-branded bicycle would align with broader micro-mobility trends, including e-bikes and urban-focused transportation solutions. For investors and enthusiasts, such a product would likely be more about brand extension and ecosystem building than near-term profit. It could also serve as a platform to showcase Tesla's expertise in batteries, motors, and lightweight design even at much smaller scales. As more verified details emerge from accessible sources about a potential Tesla bike, including pricing, specifications, and target markets, the significance for Tesla's broader strategy will become clearer. For now, it remains a potential signal that Tesla continues exploring new forms of electric mobility, complementing its car, truck, and energy products. That wraps up today's Tesla Daily News. Thank you for listening, and if you enjoyed this episode, please subscribe and stay tuned for future updates.